A new year is quickly approaching and you are still not profitable. You say you plan to make changes in 2025, but you still do not have a proper trading plan. This video is going to be your full solution as I'm giving you a free 2025 trading plan for all of you to use. So make sure you watch this video all the way up until the end so you can get every single benefit out of it. Before we get into this actual guide, I just want to quickly say that I was hosting a 50% discount on Black Friday, but many of you don't know that I was hosting it because I didn't upload a YouTube video. So I'm now uploading a YouTube video and I will be leaving this discount up until December 31st so that you all have the opportunity to get into the mentorship, to make changes in 2025 and actually get on a proper trading journey to profitability using all of the benefits that I have lined up for you guys. You get a full course and you'll get the new 2025 trading signals room with live trading sessions and all of that good stuff. So if you want to find out more and purchase, make sure you click the first link in the description. But without further ado, let's get right into today's video. Okay, everyone, so here it is. This is the full trading plan. You guys can take a screenshot of this, but let me actually just explain every single part of this trading plan and how we're going to utilize it before we move on to the charts itself and actually use it. So we'll first move on to this sort of first area over here, which is the risk guidelines, which is, I've put this first because this is basically the most important thing when it comes to your trading plan, which is that if you stick to your risk guidelines, then you shouldn't fear on losing a funded account or losing out or blowing your account or whatever, because you're going to set certain guidelines in place so that you can stop yourself from doing that. So the guidelines that I have put for most of you is to max risk is going to be 1% per trade. And this is your maximum. So your average trade should be anywhere between 0.5% risk and 0.75% risk. That is your average. Your max trade should be around 1%. So if you have an A+ setup or a really good setup, then I advise you to use 1% risk. But if you just have a regular trade that you're trying to enter in on, then I'd recommend that you go with 0.5 to 0.75% risk. So that is the first part of the risk guidelines. The next thing is minimum target is 2 RR. And the reason I say that is because if you are going to be risking, potentially 1% or 0.5% of your account, then we want to be making some, marginal returns to keep ourselves profitable. Because if we are not making enough profit on the risk that we are putting on the trades, then we're kind of doomed to lose money on our account. So we have to have a minimum target of 2 risk to reward. Our max loss per week is -2%. So if you are trading throughout the week and you end up in a point where you're -2% in the week, I'd say either stop trading that week completely and then come into the fresh week with a new sort of analysis, new fresh week, new beginning, new start, right? Or you stop, you reevaluate, you take a day's break, you reevaluate what went wrong, and you do a proper thorough analysis of the current trades that you've taken for the week, which have led up to that max 2% loss. So we're kind of putting barriers on ourselves so that we don't end up blowing an account. And this is especially important if you're trading a live account or a live funded account, because you don't want to end up in a rut where you lose 4% in a week and then 4% the next week, and boom, just like that, you've lost your account, right? You want to set these guidances and these guidelines in place so that you can avoid the big consequences, because -2% is recoverable. You can make 2% in a week, but -8%, that is very hard to recover from. So, and the last thing for the risk guidelines is moving your stop loss to break even after we see a break of structure. This is a personal favorite of mine, especially on funded accounts, because if you move your stop loss to BE after break of structure in the direction of your trade, so let's say you're selling the market, you're selling your USD. If I see a bearish break of structure, that means I will set my stop loss to break even, because it tells me that price is way less likely to come up to my SL to break even point, because we have a break of structure in our favor. Just to visualize that, let's say I took a trade over here at this point, and then price breaks this new structure. It's unlikely that price is going to break through this level, because then we would have lost our trend and the trade idea would be invalidated. So that means we can move our SL to BE, just as a brief explanation. Okay, those are the risk guidelines. Do not overlook what we have over here. Like I said, this could potentially be the most important part of your trading plan. So make sure you include this when you guys copy this down. The next thing is your analysis guidelines. These are the guidelines that you're going to be using when it comes to time frames, and just a general idea of what your analysis should look like. The first thing is we are going to be finding a higher time frame bias from where? From either the daily time frame or the 4-hour time frame or anything in between. If you want a top-down analysis guide, make sure you watch this the video before this video. So the last video I uploaded, because I give you a full guide on top-down analysis. But yeah, find a higher time frame bias using either the daily or the 4-hour. This will just allow you to get a better understanding of what price is doing, where price is moving, what recent what POI structures price has recently tapped into, so that we can just get a good understanding of where price may be going for the next couple of days. Again, like I said here, use point of interest based structures. So this could be fair value gaps, supply and demand zones, previous day highs, previous day lows, anything which has interest to us that may cause the market to shift in a different direction or to continue its same direction. Identify the current market position. So what I mean by that is, are we in a bearish trend? And if we are in a bearish trend, are we in a very oversold position? Are we in a very overbought position? Are we in a consolidating market? Look at the market position, because this can save you from a lot of losses, because you can be right over here in a bearish market and thinking to yourself, let me continue to short. But there are POIs up here which need to be filled out for price to continue on its bearish trend. So what you do is you understand your market position. Are we oversold? Are we overbought? Or are we just consolidating? Okay, entry only after a confirmation. So even if we move on to the lower time frame and we're obeying our higher time frame bias, we should still look for a lower time frame confirmation. This can be in the shape of a change of character, a break of structure to show continuation, perhaps a liquidity sweep in our favor, or something along those lines. Our entry, of course, is from either supply and demand or a fair value gap. Our entry model. So what are we actually going to be using to enter in on these trades? We will be using a higher time frame bias to just have a higher time frame bias to understand where we think price is going for the next couple of days. And this will be from a fair value gap, a liquidity sweep, or a supply and demand zone. We move on to the middle time frame or the lower time frame and search for a change of character. This will act as our confirmation for this particular entry model. Your entry model could potentially be different, so you can copy these two, as these are the most important parts of the trading plan, and then interchange your entry model with whatever you use, but this is mine. Then I will enter from a supply and demand zone or a fair value gap after finding good confluences for this trade. So after I see my trade lines up with the Fibonacci, seeing a nice liquidity sweep, seeing some levels of inducement, seeing all of these good things which will help the trade be more valid, then I will enter from either supply and demand or a fair value gap. Very simple entry model. Now, my target and my SL. My target goes at liquidity levels, highs and lows, or previous day highs and previous day lows. We can target any one of these levels as these are levels where price is magnetized towards. Price is very attracted to these levels because those are the levels in which price needs to either sweep, it needs to mitigate, it needs to take out, etc, etc. Oh yeah, I've got to add here opposing levels of supply and demand. Those are actually very good places to put your target because price needs to come up and mitigate those levels so you can put your target there knowing that price will reach that level. And your SL goes to a point of invalidation for the trade idea. So let's say you are entering from a supply zone and you are bearish. So if I enter right here, if this is my entry, my SL will go at the point of invalidation for this trade, which is right here. As the swing high over here tells me that if my trade goes above this level, then there's no point in holding this trade anymore as the trade idea becomes invalidated at this point. And my analysis was wrong. So there's no point holding a negative and a losing trade past this point. So this is where my SL goes. Simple as that. And this is all we need for a basic trading plan. And I guarantee you alone, yeah, if you use something along these lines, you take the basis and the structure of this trading plan and you mold it into your own, you will find it's so much easier to take trades and become profitable because you actually have a foundation behind your trading. So what we're going to do now is we're going to go on to a couple of examples on the chart, and we're going to apply this trading plan, and I'm going to show you how you can use this in practice. So I'll see you guys in just a sec. Okay everyone, so here I am on EURUSD. We're going to start off with finding a higher time frame bias, and this is under the analysis guidelines section. We're going to find our higher time frame bias on the daily time frame, and we'll go based off of POI structures. So on a daily time frame, what can I see on EU? I see that first of all, this big wick over here indicates that price is either reacting from some sort of zone, or it is doing a reversal in the opposite direction. So let me see if there is anything to the left side which indicates that price is reacting from something, and I instantly see this little demand zone over here telling me that price is reacting from it, because we can see that wick, it tapped in and instantly rejected from this level, telling me that we are going to see movements towards the upside, right? So now we can think about our market position. My market positioning right now is that we are definitely bearish, and we have been bearish for some time now. But I am at a point in this bearish structure where we seem to be quite oversold. So I'm thinking that price could potentially move up, and it can react from here and move up, and then it can continue its downtrend. So overall, my higher time frame bias is telling me that we are bullish despite being in a bearish trend. So after that, we see that we move to the entry after confirmation and entry from SND. So we've basically done all we need to do in terms of understanding our higher time frame bias. Let's just quickly go over the 4 hours, see if we can find anything else. Okay, I see that we recently took out this supply zone, which is another thing that tells me that supply is failing. So that means demand could potentially be taking over, for now at least. Okay, so now that we've done that, we can now move on to the middle time frame to see the recent break of structures and recent sort of analysis and where price is moving towards. So I can see here that price reacted from a zone over here, which caused price to reject from this level and continue towards the upside. And we have seen continuous breaks of structures towards the upside, right? Signifying that we are moving bullish successfully. So now what I need to do is, so if I go back to the guidelines, wherever it is, right? If I bring this here, reset this chart, bring this here. So we can see that our our entry model is high time frame bias, tick, which is this bullish zone. Move on to the middle time frame, search for a change of character or a break of structure, middle time frame break of structure. I mean, yeah, we can say that we have a break of structure. So if we say we have this previous high, we have a break of structure coming through right from this bullish movement here, and we enter from a zone or a fair value gap. I can see a clear fair value gap right there. So that is my entry level. Now we look for confluences to aid this trade. So we need to know, is this trade a high probability trade or a low probability trade? So we have the confirmation, meaning that this is going to be a a decently winning, like not highly probable as of yet, but we know that this trade could play out very well because we have that confirmation. Another thing is we have bullish order flow, so we can clearly see that price is tapping into bullish zones, reacting from them, and giving us a positive reaction from these levels. So now we are looking for our next positive reaction from a tap into this fair value gap. Okay, so we get a tap into the fair value gap. That's another confluence. The bullish order flow, that's another confluence. Another confluence is we have this huge buildup of liquidity, right? When we have a huge buildup of liquidity sitting right above our fair value gap or our demand zone, it tells us that price is gonna what? sweep this level, tap into our zone, and then reject and move towards the upside. So those are all very strong confluences pointing towards us having a good trade from this particular level. So what do? We set our entry, we set our stop loss to the point of invalidation. So let's look at the target and SL. We've sorted out the entry, now we need to sort out the target and SL. So what does the trading plan say? Remember, we always refer back to the trading plan. Target liquidity, highs, lows, previous day high, previous day lows. And we look at our risk guidelines now that we're taking a trade. So I'm going to put 1% down on this trade because we have good confluence. Everything looks good. What do we do here? We risk 1%. Okay, risk 1%. Minimum target 2 RRs. So let me just put a minimum target of 2 RRs over here. And our other targets are at liquidity highs, lows, or previous day highs, previous day lows. So I can see that we have a previous day high over here, which is acting as liquidity with these neighboring highs over here. I can see we have a swing high all the way up here, but this is a very ambitious TP, as this was, yeah, this is very ambitious TP. We have some gaps to fill in. We have some fair value gaps over here to fill in. So these are all potential take profits for this trade. Now, what else do we have? SL goes at the point of invalidation. So our point of invalidation for this trade is this swing low over here, because we can see in this bullish trend, none of these lows have been taken out. So if we see a swing low, the previous one, taken out, then we can say that this trade is no longer valid. So we target minimum of 1 to 2, targets at the fair value gap, our entry at the fair value gap, and our targets lie all across here. And our risk says 1% per trade. Okay, so minimum we're gonna make 2%. Target, okay, max stop, move stop loss to break even after BOS. Okay, so let's get started with this trade, guys. Okay, we very swiftly hit our minimum, and we very swiftly hit that nice 1 to 3 threshold. Let's see how else this trade performs. Also, we can go to break even now that we have seen a break of structure over here. So now we can go risk free, meaning we don't lose any more on this trade after securing that 2% and seeing that break of structure. And boom, the trade progresses on to this void that we need to fill. So now that's 1 to 4 secured. Let's see if we hit that swing high. And we hit that swing high. Very ambitious take profit, but hit nonetheless. 6 RRs banged all through this trading plan. You can see this was simple analysis and nothing was really too complicated about this trading plan, guys. So just something as simple as this little thing that you can screenshot right now can absolutely get you trades like this and can absolutely transform your trading in 2025. So yeah, guys, thank you all very much for watching. And again, if you do want to get involved with the mentorship and learn more about the way I trade and analyze the markets to make consistent profits, then make sure you check the first link in the bio and get a 50% discount only up until December 31st. If you want to get your FTMO or challenge account passed, fully guaranteed with a contract provided, or you don't pay a single penny, then make sure you also check out the link in the bio, or you DM me bots or trading software, or pass my challenge, any of those things, and we can get you set up with that as well. But yeah, thank you all very much for watching, and I will see you in the next one.